Hey, I'm here with Tommy Guardside with Goosehead Insurance.
That's right.
And how long have you been doing insurance?
With Goosehead, 9.5 years. Before that, we had a family-ran farmers agency. Right now, it's still family with Goosehead. My sister and I, Diane Fitz, have the Goosehead franchise right now.
I know in Texas with insurance, homeowners insurance in particular, it is kind of a game, and you got to always be informed as a homeowner and know what's going on. And I know we were talking earlier about how a lot of people that have their insurance built into their escrow or into their mortgage, they're going to be coming up with a little surprise here, or if they haven't already, some probably already are. So tell us a little bit about that.
So what you typically run into whenever you have an escrow account is that the mortgage company estimates what at the end of the year what your taxes and your insurance are going to be. So at the end of the year, they disperse the taxes and they build up in the escrow a savings account per se for what they think the amount of insurance is going to be. Same with taxes. So once they get those bills, they disperse them. Now, if there's a shortage in your escrow, let's say, last year you paid $3,000 for your home insurance, and now your insurance for your home, they estimated would be right around $3,000 again, is now $5,000. You have a $2,000 shortage. So when the mortgage company does a recalibration or recalculation of what your new monthly payment's gonna be, that's where you see the increase of taxes went up, insurance went up. Now your monthly payment for your mortgage has now increased. And typically they don't catch that until the beginning or the end of the year. So if they pay it in the middle of the year, you're playing catch up, but you don't know you're playing catch up until you get that new bill from the mortgage company.
Yeah. What have you seen so far from some of your clients in terms of their bills going up, how much?
So I'll give you my personal one. Mine went up $500 a month because taxes and insurance both increased. But I'm going to be getting a new roof soon, and that's going to help me save some money on my insurance. My man Brad's going to get that done for me.
Yeah.
So, which will bring the total payment for my insurance down. So I'm hoping to kind of offset some of that cost, but across the board, I've seen anywhere from people telling me that their mortgage went up from $200 a month to $1,000 a month, depending on the size of their home and the risk that they're in.
Yeah, so premiums are going up, which is causing people's monthly bills to go up. Mm-hmm. And then in terms of when it comes to filing a claim for a roof, so let's say they get hit by hail, what are things they should be aware of in terms of deductibles, the policy? There's ACV versus RCV. A lot of people don't understand that either.
Right.
What should they be aware of for that?
So most carriers are now going to a mandatory 2% wind and hail deductible. Traditionally, it was a 1%. So to put that in perspective, if the reconstruction cost of your house is $500,000, it would have been a 1%, which is $5,000. Now it's probably 2%. Most everybody is going to 2%. So now your deductible is closer to $10,000, or is $10,000 in that scenario. The RCV versus ACV. RCV means replacement cost. ACV means actual cash value. You want replacement cost for you as the homeowner. Obviously, the insurance carrier probably wants you to have ACV. RCV is saying if your roof, for example, let's say to replace your roof is $30,000 minus your deductible. Let's say you have a 2% wind and hail deductible at $10,000. The insurance company should cut you a check close to $20,000 to replace that roof at $30,000. That's replacement cost, which will bring you to the total of $30,000. Same scenario, but now you have ACV, which is actual cash value, which is adding depreciation into the cost that the homeowner is now responsible for. So meaning you're subject to a $10,000 deductible less the depreciated amount. Usually that's just on the material, not the labor. So let's say your roof is 10 years old and it's now actual cash value. There's a percentage on what the carriers usually use. Each carrier is different. All underwriting is different from every carrier. So they might be at an 80% depreciated rate. So meaning that 20% of the 80 you would be responsible for. So whatever that cost is, that could be, I don't know. You would know better than me.
I mean, it could be another $5,000 to $10,000 in that scenario where you're talking about a $30,000 roof. Now there's another, say, $7,000. You got your deductible, $10,000, then another $7,000 taken out.
Yes.
So now the homeowner's responsible for that much more money.
So it could be very costly.
So yeah, so what would you recommend to homeowners who are looking at insurance and they need to shop insurance and maybe they have an old roof, maybe it's 8 years old, which in Texas that's considered starting to get old.
Pretty much, yeah.
If you moved here from out of state, maybe another state doesn't consider that old, but around here that's starting to get old.
Yeah.
What would they want to look for in a policy? So they got just a standard roof, it's 8 years old, what kind of policy should they be shopping for?
It all comes down to the underwriting. So basically you need to be asking the insurance agent questions. The question that I would ask, how is my roof covered? Is it covered at replacement cost? Is it covered at actual cash value? That would be the question. Right. And now, remember, you're in a 1-year contract with your insurance. So the policy that you bought, say January 1, 2025, and once it comes to renewal for January 1, 2026, the underwriting might have changed for the offer of renewal moving forward. So you always want to check your policy documents because a replacement cost policy for your roof, January 21 or January 1, 2025, might be renewing at actual cash value come 2026. So now, again, you need to review your documents. If you don't know what's going on, you can call your agent and ask them.
Yeah, and what we've been finding is a lot of homeowners, their policies renew, they get a little thing in the mail, it's a big packet usually. Most people don't read through the whole packet. And they don't realize that when their renewal happened, it switched. It switched to a 2% deductible,
right.
Or switched to a ACV policy, or even both, and they don't know it.
Right.
And then what happens is a hailstorm comes and affects their property, and they have to call in a claim, and they don't realize that their policy had changed.
Correct.
So in terms of recommending what people do when they're going to renew their policy, what we recommend is, one, to have your roof looked at if you haven't, because a lot of people have maybe damage on their roof that they don't know about. And if your roof qualifies for a claim and you're approaching, especially if you're approaching a point where your deductible is going to change, or you're going to change to an RCV, you might want to get a new roof and a better roof on there, because kind of like what you're doing with your house, putting on class 4 impact rated shingles.
Right.
The days of just slapping it on shingles on roofs around here and expecting a free roof next time, those are over. Would you say that is
yes,
true? Yeah.
The carriers have pretty much stated that they are no longer going to be your maintenance company, your maintenance repair company. A couple of them have stated that. What I always recommend is getting your roof inspected. Don't call the insurance carrier. Always call a roofer that you trust, and HBR Roofing is the best. So call them, have them do an inspection, and see where it leads.
Yeah, very cool. Anything else that homeowners should be aware of in terms of insurance? And Tommy too, in terms of recommending someone as a broker to shop insurance, there's no commitment. You can always just pull up, check the rates. He can check your policy too that you currently have.
Correct.
Us as we're experts in roofing. We can check your roof, but I'm not a policy expert. You got a policy expert here that can just check your policy and just make recommendations and things like that, and shop and see if you can find something better.
Typically what I see with clients when they're shopping insurance, they don't want to spend a great long period of time shopping their insurance. I would tell you to, slow down a little bit, ask more questions, and make sure you really know what you're purchasing. So, because it can be costly if you don't have the right policy.
Yeah, we've been finding that with homeowners get surprised. You don't want to have a surprise.
Yeah.
When an event happens and you do need to utilize your insurance. So.
Yeah. And again, it's a 1-year term for homeowners. It's not the same going year 2. It could be close, but there's always changes. So always review every year.
Yeah, absolutely.
Yeah.
Cool. All right. Well, thanks, Tommy, for
Absolutely, man.
coming out.
Thanks for allowing me to be here.
Yeah.